That's basically turning on the printing presses, printing money, giving it away for free, dreaming up other reasons to give more money away for free, such as student loan forgiveness. And then the Anti-Inflation Act, that's just hilarious to call it that. It's very inflationary. And so at some point, we'll have to stop printing money, but it hasn't happened yet. All-time record deficit, consumers flush with cash, and these earnings are proving it out this week. If we're going to get a slowdown in earnings, it's probably going to be in Q1 or 2 next year, because it doesn't look like it's going to make it this quarter. And as a result, we've got a really perplexing, difficult time for investors. Well, the inflation fears come from the CPI number, which was over 8%, and that is inflationary. However, there's a new narrative going on in the market with investors regarding how the CPI is constructed. 40% is in shelter. And shelter stats are notoriously long dated. In other words, the numbers you're seeing now reflect the shelter market, the housing market, the apartment rental market 18 months ago, when it was smoking hot. That is not the case in major cities now. Rent increases have slowed down, housing prices have softened as mortgages have increased, and yet it's not reflected yet. So it's a little bit of saying, I want to change the data set now because I don't believe it anymore. That's kind of one narrative. But even though it's sitting at over 8%, the market is willing to fibrillate. I don't think so. I agree with you. I have another index, Las Vegas, which I've never seen it fuller than it was last week at the Web3 conference. You couldn't walk in the aisles. It was so jam-packed. Casinos jam-packed, restaurants jam-packed, traffic jam-packed. So that pent-up demand is certainly there. Recessions start traditionally with a rise in unemployment. Haven't seen that yet either. If you're in the food services industries on either coast, where in California, for example, the minimum wage is $15, you can't even hire people for $23 an hour now. They don't even want to work. So that cash that's flushing around the system still having an effect there. It's not clear how the poo-poo hits the fan on this one yet, but the market has made a decision. The corrections in the S&P 500 have been brutal and fast in every single sector. And so the market, generally speaking, is never wrong forever. And what it anticipates is a sharp decline in earnings, because right now the PE, if we believe the earnings for next year, is sitting between 14.5% and 15%. Well, that's getting close to a bottom. I mean, you could argue the bottom would be 12x, which is really, really low earnings for the S&P. But here we are at 15. I'd argue it's time to start nibbling. You can't guess the bottom, but my goodness, just on a strong index basis, you could go into this market saying to yourself, regardless what the correction is, 2/3 of it's baked in. When we talk about politics, abortion was the issue, and that seems to have been shifting now in the last few weeks to inflation and the cost of protein like chicken and food goods and gasoline back in the fray again. So, these things are binary. They're very difficult to call. But it does matter to you as an investor what happens in the midterms. There's no question about that. Well, in the polls, and all of us buy services that are investing to get this data every day, they're about 6 seats ahead. I've learned in the past that means nothing. There's no guarantees on anything. But right now, that would be the House. You can't call the Senate. So let's say the House flipped. The good news on that is all new bills, all new initiatives that are not bipartisan bills, in other words, ramma-jamma down your throat bills like the student debt thing, ramma-jamma bill like anti-inflation bill. I mean, nobody wanted to vote for that on the other side of the aisle. So those kinds of bills are dead for the rest of this presidency. There'll be total gridlock. And that is a good thing. The markets love gridlock. Markets like a pause that refreshes. We need a pause. The printing presses have gone insane, and that's why we have inflation in the first place. I mean, for all the talk about inflation, you print $6.72 trillion in 30 months. What the hell did you think was going to happen? Of course there's going to be inflation. By those bears that are concerned about a global recession and use of energy. But not every country is buoyant with the consumer as the U.S. is, because the U.S. dollars cause lots of headaches in other currencies. When you look at the value of currencies in other nations against the U.S., it's getting very, very tough for them. And so there's a lot of cross currents here, but right now, people are focused on the Fed, they're focused on the midterms, and all of this is going to play out in the next 5 weeks. So stay tuned. It's going to get really interesting. I love the British parliamentary system. I'm very familiar with how it works. And in fact, there's lots of precedent for prime ministers that come in, make a fatal mistake right out of the gate, as she did on this corporate tax thing and personal tax thing, and then get whacked immediately. They lose the support of their caucus. In the parliamentary system, the only way you become the prime minister, that's like the queen bee, you're elevated to that position for one reason, so that you can fill out your caucus, your cabinet. You choose the cabinet members. You're the orchestra leader. But if you choose cabinet members like finance or exchequer and all of these other important positions in the British system, and they don't like you, they turn on you like a rabid dog and they throw you out with a confidence vote. That happens all the time. Now, what's holding this one back is they're not sure they'd win a general election given all the, snafus they've had. But I love Downing Street. I love the chaos in parliamentary systems. I really enjoy it. And it's the outcome's unknown. But obviously, she backpedaled, and it has brought a little stability to the credit markets in the UK. But this is the kind of thing, people think politicians are infallible. They're not. They make lots of mistakes. And there's a good example of how that happened. Yeah, actually, their earnings were pretty good. People are concerned about what happens. The challenge with Apple now, it's trading at a really high premium to the market PE, is that the narrative's slowly switching to consumer electronics. You got to remember, Apple was a tech company, but that's not the case now. So many people are focusing on the manufacturing of iPhones being the only thing the company does, which isn't true. But when a narrative changes on a stock, it can compress PE. So when it broke 150, we lightened up on it. We still own some. I don't like the chart. I don't like the story. I don't like the narrative. And I am worried about what happens if these really expensive iPhones, if there is a slowdown at the consumer level in Q2 next year, or Q1 even that early, if that doesn't take that stock well below 120. Because really, if you believed it was going to trade at a market multiple, you'd be at like 105 right now. And so I don't think it's a safe place to park money. I think, it should be weighted under a full weighting. For me, 5%. So I've got this thing sitting at around 2% weighting, willing to buy more. But I think the next direction for Apple is down.
Anything safe for you these days? What is safe?
I don't see anywhere you can be safe right now. You have to kind of tread water. I continue to add in two areas, really high quality US S&P 500 companies, of which I buy 100 of the 500. Very, very difficult. If the company's not profitable, there's not a lot of investor appetite for it. So you have the haves and the have-nots. In addition to that, the whole Web3 movement, which was what that whole conference was about, is more towards mass adoption. Everybody that's investing money into that is trying to solve for the wallet, number one. Number two, security. And number three, regulation. Those are the three horsemen of the new Web3 movement. Mass adoption through regulation, through security, and a much easier to use wallet. The best analogy I can give you, until your grandmother can figure out how to buy Bitcoin on her cell phone, we don't have a wallet that works yet. It has to pass the grandmother test.